Hi guys, welcome back. So, I guess recently a lot of people are wondering what's happening to the market for real? Why is this correction so strong to the growth stocks? Are we out of the correction and afterwards are we going upward or downward? And for a lot of the Chinese stocks, is it going to be more attacked by the political issue and keep going down? And what to do with your portfolio? So in this video, I want to share with you my own thinking and analysis about the Chinese stocks, Chinese companies situations at this moment by pulling up the chart to see what happened within the last 12 months in order to see the different possibilities from a more objective point of view. And then I'll share with you my plan personally for my top holdings. So I started my channel at the beginning of January, and the second video I did was about my strategy of 2021, and I said that starting from this year my strategy would change to 50% in rising industry and 50% in emerging market. And by emerging market I meant mostly Chinese market and Chinese stocks. And then on my fourth video, it was the day a lot of the Chinese stocks got hit because a few of the Chinese companies were delisted from the US stocks market. It was first when I introduced EH, it was around $21. And when I first introduced Huami, which is ZEP right now, it had a jump of that day. And when I first introduced YSG when it was 16, jumping recently from 15. After that, on my fourth video, it was the day when a few Chinese companies were delisted, and it had created some selling off, some panic selling. And that was when I posted the video to reinforce why I was bullish on Chinese stocks, because I see the opportunities of the future growth at a faster rate, and why I think it should grow back to the normal valuation. Here, I talked about how they are so undervalued, talked about the trends of national brands, and I said that we should take advantage of chances like this, like the delisting news or political issue, to grab some good Chinese stocks at a bargain. For example, Baba, Tencent, and Baidu. At that time, Baidu's share price was 203. It was the beginning of 2021 and people are still quite fearful about Chinese stocks because there were just constantly news and issues coming out from them about delisting, about the new law. So later on, I have made another video to share why I think starting from 2021, it would be the prime time to invest in a lot of the Chinese companies. Because I thought the valuation of a lot of Chinese stocks had bottomed already in 2020, and it should grow back to the normal valuation starting in 2021. So after I first recommended EH around 21, it then had grew quite fast to be as high as 129. And ZEP has gone from 12 when I first introduced it to be as high as 20 before the correction. YSG has grew from 16 to be as high as 25 before the correction. So I said these Chinese companies were just too low in valuation, that they did not really make much sense, and it should grow back to the normal valuation. And it happened. The speed of growth was just way too fast. For EH, it had grown more than 500% in just 1 month. So I think in February, before the correction, we know that people have started to change from being very fearful about Chinese stocks to be more confident and somewhat putting the political risk behind. So then during the whole correction of tech stocks, a lot of the Chinese companies went down harsh. And along with the political issue, it just went down even further. So a lot of people are starting to think again that Chinese companies are not trustworthy. There's just too much drama, too much political risk, so let's just forget about it and stick with the American companies. Because when the market burst, Chinese stocks would drop much more than the American stocks. And think the return on investment on Chinese stocks is lower because they drop harder. So for this, let's compare to the return on investment of the year to date. So if we look at the ARK-K, the ARK Innovation ETF, which is quite representative for a lot of the growth stocks. And we can see the year to date is minus 4.25%, and that is an ETF. so it should be more mild than individual stocks. And if we look at some more typical examples of growth stocks and we draw the interval from now to the beginning of the year, so Tesla is also down 4.7%. And if we look at Nano Dimension, it is down year to date by 8.4%. If we look at from the last trading day of last year, it would be down 12%. And if you compare to our Chinese stocks like EH, it is still up by 63% year to date. If we look at ZEB, even though it looked like it has dropped a lot recently because of the correction and the political issue, from the year-to-date point, it has only dropped about 3.3%. For YSG, it's down 25% year-to-date, but because it's a recent IPO stock and we know it's much more volatile than stocks that's already public for years, because those would have a much more clear support line rather than recent IPO stocks. And if we look at LKCO, it is still up 84% year to date. And even after such a big fall, it is still up about 95% since we first bought in at 67 cents. And for Luckin Coffee, the year to date is still up 5.8%. Even compared to when I first introduced it in January, it was at $9.7, so it is not down a lot compared to that time. Even Baidu, that was under the big attack from the margin call, it is still up 0.09% year to date. And compared to when I first recommend to grab the dip of these Chinese companies with the delisting news, that was 203. So we are still up by around 7 to 8%. For Wimi, the year to date is up 14%, and compared to when I first introduced it, which was $6.8, so right now we are down by 0.03%. So in general, most of our Chinese stocks have actually outperformed the RK Innovation ETF. When the stock market does a correction or crash, it is actually normal to see individual stocks dropping more than ETF. But when we put them all together, we can see that only few of them had dropped more than ARK's ETF, and most of them have actually outperformed ARK or even Nasdaq. So even though a lot of people recently feel the Chinese stocks are risky, it crashed a lot, is too much drama, and something to avoid because of the political risk, maybe we should first look at the overall picture on the year-to-date performance instead of relying on the feeling, the emotion. So why some people think they have a lot of losses in the Chinese stocks recently? Let's take EH as example. So when it was 20, there were a lot of news about Chinese companies being delisted, about how you cannot trust Chinese companies, about a lot of political risk, etc. And then after it has gone up a bit, there was the political news about Xiaomi being delisted and drove it down again. So some people were still skeptical, but then it just kept on rising afterwards. And then more and more people would join in the party because the stock price driving up would make people forget about the political risk. When EH was above 100, I didn't hear anyone talk about the drama of Chinese companies, the political risk. But when the share price crashed, a lot of people were very negative again. And then it continued driving down further because of the recent SEC law passing through. And suddenly, a lot of people are starting to have a lot of fear again. So I think that would be the reason why some people think they lose money with Chinese stocks. It's because of the market manipulation, of how they're afraid to buy it when it's low because of the news, and how they cannot resist the run up and get it when it was high, while forgetting about the risk. And then when it's back down again, to be driven again by fear, to sell off or cut loss. So that is the whole cycle again, from fear to greed and back to fear. So at this moment, if we are manipulated by fear again, then we might be back to the cycle completely again. And this is how people lose money. That's why when we look at these stocks, even though we might think that it has crashed a lot from the top in the recent 1 to 2 months, the year to date is actually looking quite good because we are now only at April. So we're looking at 63% in one quarter. It's really not bad return on investment. And 84% for LKCO and 14% for WIMI. The year to date is still quite attractive, right? But of course, all the companies I've chosen here, it's what I believe was undervalued to begin with, or it would have a turning point in the near future and cause the share price to increase quite a bit. So that's why right now, for these companies, would you say they have gone up a lot or they have dropped a lot? For LKCO, would you think it's dropped a lot or would you think it's gone up a lot? Like for NIO, would you think it's dropped a lot or would you think it's gone up a lot? If we look at the monthly chart, this to me looks like a healthy correction after a strong run up. And that is why I think the EV sector needs to cool off for some time before it run up again. And I said that I see more catalysts coming up for the second part of 2021 for NIO because of the whole sector cooling off and also more catalysts for the company itself, right? And same thing for EH. This is looking like a healthy correction. And similar with LKCO, run up correction forming a round shaped bottom. So from the daily chart of NIO, it looked like we have broken all the supports. But if we pull up the monthly charts, it hasn't even dropped below the 10 MA yet. So that's why from the daily chart, it looks like the trend is gone bad. But from the monthly chart, it looks like we are still in the uptrend but experiencing a correction. This is why sometimes we need to take a few steps back and look farther than the activities for a few days to know where we are. The best way to create fear is to drive down the share price fast. And if they don't drive it up so fast, how do they have room to drop so fast? And before they drive it down, they need to drive it up and then have room to drop hard in order to create the panic effect. And if we know the intention behind them, we need to control and counter the emotion and ask ourselves the question, has it dropped so much because it's a Chinese company? Because of the SEC's law against Chinese stock? Or because it has just simply gone up too much? Because of the HFCAA, the Holding Foreign Companies Accountable Act. This has driven down a lot of the good Chinese companies and caused a lot of dumping like garbage. So what is your plan about this? Is that something you need to worry about this time? Because all the other times the market was speculating on it. It has been going on for over a year, and we have reason to believe that the whole run-up since the beginning of 2021 was partly driven by some speculation about how the new Biden's administration would be easing off the Chinese companies and even potentially slipping out of this law of HFCAA, the Foreign Company Accountable Act, right? So now that it has passed the law with the new Biden's administration, is that something we need to worry about? To think about this, we can pull over the chart from NIO and see how it went for the last year to be an example. If we go all the way back to last year, this was in April to May. So on this day, April 2nd, when Luckin Coffee was admitting the fraud and NIO had dropped near 10% on that day, it might be partly influenced by it because it does raise a lot of trust issue on smaller caps Chinese companies. So then after a month, President Trump has threatened to delist all the Chinese companies from the US stocks market. And at that time, a lot of the Chinese companies had a drop, but overall it has not broken down the ongoing uptrend back then. So now we can zoom out. This was when they threatened to delist all the Chinese companies. And then this was when they brought out the HFCAA, the Holding Foreign Companies Accountable Act. And then this was when President Trump had signed officially off the HFCAA. And then this was from the Alibaba crash because of the postpone of the IPO of Ant Group. And then this fall is from the SEC passing the law of the HFCAA. So within the past, we have seen many times that the share price had dropped because of the political news, especially about the HFCAA, several times already. Every time in the past, it has not dropped below the uptrend movement and never broken down the support. Even though at this point and this point, it looked like it was going to break through the support, but it didn't. It bounced back up almost on the same day. And this time, a few times we look like it has broken down the supports as well for actually a few days. So it seems like this time it has taken a bigger hit than previously. So do we think this time the political issue is different than all the times before? And what's the reason for it? For this, I have summarized and come down to 5 reasons. And because this video is too long, so I will post that tomorrow. So hope you look forward to it, and feel free to give out your thinking in the comment section down below. Okay? Now, if you have enjoyed this video, please give me a big like and write me a great comment, and I will see you tomorrow. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.